Welcome to The Explainer. Today, we're breaking down the legal journey of a business right here in the Philippines into a guide that's clear, simple, and straight to the point.
You know, so many of us have that entrepreneurial spark. You see a problem, you get an idea, and you think, hey, I can build something to fix that. But turning that dream into a real, breathing business takes a lot more than just a great idea.
It's a full-on legal journey. So today, we're going to walk you through that entire life cycle, from the very first step of creation all the way to its final chapter. Think of this as your roadmap. Okay, let's dive in. Your very first and maybe most critical decision is choosing your business's legal structure. The best way to think about it is like choosing your armor. It defines how you operate and, more importantly, how you're protected. And the most critical difference here boils down to one powerful word: liability. Let's take the example of Diane from our source material. Say she wants to open a risky new restaurant. If she goes the sole proprietor route, she and her business are the same legal entity. If things go south, creditors can come after her personal car, her house, everything. But if she forms a corporation, her personal stuff is safe. The absolute most she can lose is the money she put into the business. Huge difference. Now, for the longest time, getting that corporate shield meant you had to find business partners. But the law has really caught up. Today, a solo founder can get that exact same limited liability protection through what's called a one-person corporation, or OPC. It's an absolute game changer for individual entrepreneurs.
All right, so you've formed your corporation, you've got this powerful legal defense we've been talking about. But how does it actually work? What is this shield?
Well, it's all based on a legal concept called the doctrine of separate juridical personality. It sounds complicated, but all it means is that the law sees your corporation as its own person, completely separate from you, the owner. That separation creates the corporate shield between the business's debts and your personal bank account. It's an incredible tool, right? It encourages people to take risks and build things. But what happens when that shield isn't used for good? When it's used to hide from responsibility? Can it be broken?
You bet it can. The courts call it piercing the veil of corporate fiction. If it's proven that the corporation is just a front, a puppet being used to commit fraud or cover up something illegal, a judge can just set that shield aside and hold the owners personally responsible for the damages.
Okay, so you've got the legal structure, the armor, sorted. But now you have to protect the very DNA of your business. We're not talking about desks and computers here. We're talking about its most valuable assets, its unique brand, its inventions, its creations.
This really comes down to three main pillars of intellectual property. First, you have your trademark. That's your brand identity, like the Jollibee name and logo that everyone recognizes. Then you have a patent, which protects a brand new, useful invention. And finally, copyright, which protects original creative works, like a book or a piece of software, pretty much from the moment you create it. Now, this quote from the Supreme Court points to a distinction that trips a lot of people up. You can't copyright the idea of a superhero, but you absolutely can copyright your specific superhero, their story, their look, the way you brought that idea to life. It's the expression of the idea that gets the protection, not the general concept itself. Let's face it, in today's world, every single business handles data. It could be a simple customer email list or detailed employee records. And handling that information comes with a huge responsibility to protect it and maintain trust.
Here, in the Philippines, this is all governed by the Data Privacy Act. And it's built on three really simple core principles you have to live by. 1. Transparency. Be upfront about why you need the data. 2. Legitimate purpose. Have a lawful, valid reason for processing it. And 3. Proportionality. Only collect what you actually need and nothing more.
Okay, so let's make this super practical. We've all been in online classes, right? They're getting recorded all the time. So the question is, can your school just record and upload those classes without asking for your specific consent every single time?
And the answer, based on guidance from the National Privacy Commission, is generally yes. Why? It goes right back to that principle of legitimate purpose. A school's function is to educate, and recording classes for students who miss them is considered a compatible part of that function. So they don't need to get fresh consent for every class. All right, time to talk about everyone's favorite topic, taxes. Look, there are two certainties in business, right?
And navigating the rules from the Bureau of Internal Revenue, the BIR, is absolutely critical for your survival.
A really big law you need to know about is the CREATE law, because it changed the game on corporate income tax. Now, this document looks dense, but here's the bottom line. The general tax rate is 25%. But if your company's net income is 5 million pesos or less, and your total assets are under 100 million, you qualify for a much lower rate of just 20%. That's a huge deal for smaller corporations.
So what happens if the BIR sends you a bill, a final assessment notice, and you're convinced it's wrong? Don't panic. You have rights, and there's a clear process. From the day you receive it, you have 30 days to file a written protest. Then the BIR has 180 days to decide. If they rule against you, or if they just don't answer in time, you then have another 30 days to take your case to the Court of Tax Appeals.
Every business story has a final chapter. It might be the end of the road, or it could be a major turning point. So let's look at what happens when it's time to either wind down the business or fight for a new beginning. And really, there are two very different paths. On one hand, you have dissolution. This is the official end of the line. The company stops doing business and spends up to 3 years settling debts and paying out what's left. But then, for a business that's in trouble but still fundamentally viable, there's rehabilitation. Think of it as a second chance, a court-supervised process to get the company back on its feet and operating successfully again. So, as you can see, from choosing your armor to protecting your business's DNA, all the way to navigating that final chapter, the legal life cycle of a business is a whole story. And understanding these pieces isn't just about following the rules. It's about building a foundation that's strong enough to carry your dream forward.